2022 was a roller coaster, lots of ups and downs, but things certainly seem to be picking back up. I know you were just talking about, your activity you've got going on right now. What are your just kind of overall expectations, predictions for the M&A space in the new year?
Things are certainly busy at Renovus. I will say that at Renovus in particular, deal volume is down year over year, but we also see a lot of volume. We have a great business development team that supports the investment team and bringing in a lot of opportunities. And we're very busy, and we're digging into a couple of opportunities right now. As I mentioned, we have a few acquisitions closing in the next month or so. But I will say volume is down. I don't think that's Renovus specific. When I speak to colleagues and friends at other private equity firms, people that work in M&A and corporate development at strategics and public companies, it does appear that M&A volume is down. And I don't think that's, far off from consensus. I think 2021 was a massive year for M&A. 2022, we were down a bit, whether you're looking at, volume in terms of dollars or deal count. And I think the same will happen in 2023. I think we'll have another down year. At the same time, it's going to be fine. It won't be the 2014, 2015, or 2021 years for M&A, but we'll be in line with what we've done in the last decade, 10, 15 years in terms of volume. I do think when you ask about predictions, I think there's going to be a lot of opportunities out there. You tend to think that uncertain macro environments are the times where you can find a lot of opportunities, and it's a really good time to invest. That's one optimistic way to look at it. I do think that you'll see less exits, at least on the private equity side. People aren't market timers in private equity, and there will be exits, but I do think you will likely see just less sell side activity as people, hold an investment a year or two longer to wait for a more certain or just a better, more bullish macro environment. And then on the negative side, I think we'll probably touch on rates, but that's a key theme right now. That's a big driver to the lack of activity, and I think you're going to see over-levered companies struggle. And that again, that's a negative in some ways. On the other side, it's an opportunity for more opportunistic buyers, and it could be an entry point for distressed firms that haven't been as active in the last several years to be more active in the market. So those are some key predictions. I would say, additionally, private equity is just going to continue to increase their increasing share of M&A activity, at least relative to strategics. There has never been more private equity dry powder than there is right now. And so I think private equity will continue to be a bigger piece of the M&A market. And I think you're going to see larger firms, move into our market, move into the middle market to deploy capital, because you got to get capital deployed in private equity, and you got to figure out creative ways to do so. And then lastly, this is a little bit self-serving, but I think services businesses, which is really where Renovus invests, will continue to be a very active segment of the M&A market. When you think about supply chain constraints and labor market tightness, general interest in less cyclical businesses, I think that points to human capital, services, outsourcing areas that we invest in that will continue to be active.
Love the shameless plug. I think that's necessary, Lee. So fantastic.
Gotta advertise, right?